Good evening, everybody. Hello, everybody. I'm Marcel Kalinovic, the Butcher of Wall Street, and welcome to Boss Blunt's Think Tank. Today, we're going to be discussing the financial, macro, and geopolitical implications of issues between China, Russia, the United States, and the outcome that is most likely to occur. Granted, I'm not a financial advisor or a legal advisor of any sort, but you will find some information in these videos that will likely make you question a lot of things that you believe to be true or untrue. That being said, you should always do your own due diligence and use the information we provide to further educate yourself and help you discern your own your opinions and of this actual environment. That being said, I'd like to welcome you all you 20,000 plus beautiful red-pilled subscribers. Thank you for joining us. I'm with the Think Tank tonight. Let's get right into it. It's going to be a fun one. But right before I get started, I would like to mention that Pantheon AMC and I will be conducting an interview with the one and only CEO of Highcroft Mining, Dr. Diane Garrett. She has a PhD and a master's, and I am very much looking forward to hearing about the future of Highcroft, their mines and operations, as well as that of their partnerships with AMC and Eric Sprott. That being said, let's move on into today's main topics, which are our good friends. Well, I guess I don't know if I should necessarily state that, but some serious issues that are occurring here between Russia and the United States. Russian Foreign Minister Sergei Lavrov and United States Secretary of State Anthony Blinken spoke today by phone at the request of the United States. Just a bit. According to Russian Ministry of Foreign Affairs, the two spoke about the ongoing situation in Ukraine and the two newly recognized free states of Donetsk and Lugansk. Lavrov said that Russia's special operations plans to the United States, he laid them out to the United States and told Blinken that Russia's goals and tasks will be fully achieved without question. Lavrov emphasized that the weapons the Biden admin are sending to the Nazi Ukrainian forces are being used against civilians on a large scale, and I quote, and is only prolonging the agony of the Kiev regime by dragging out the conflict and increasing the number of victims. Lavrov was also consistent in reiterating that the Russian military strictly observe the norms of international law, and that both parties know that one harming civilians are not the Russians, but the nationalist forces, such as the Azov Nazi militia, that they are arming. The two also spoke about global food security, discussing food shipping agreements with which Lavrov accused the United States and NATO were, I quote, exploiting the problem to advance the geopolitical interests, which is unacceptable. They also briefly discussed possible prisoner swapping between Russia and the United States, with which Lavrov said he, quote, strongly advised a return to professional dialogue in the context of quiet diplomacy without any dubious media leaks. Meanwhile, U.S. officials publicized their efforts to get back Griner, a WNBA star who I believe was caught with marijuana in Russia. In exchange, the Russian officials want, you're not going to find this on this PBS article, but Russia is basically demanding in exchange a KGB agent and so on in return. So For starters, it is beyond criminal that the Western media are not reporting that the top diplomats from Russia and the United States initiating direct talks about the proxy war in Ukraine. And once you see the contents of the phone call, you can see why Russians are reporting on it, and the United States is sweeping it under the rug, not necessarily giving us as much details as we're getting otherwise. Over here, we see that on PBS NewsHour that Blinken basically stated, I urged Foreign Minister Lavrov to move forward with a proposal to have a direct, frank and direct conversation. And they didn't mention anything else really about what I told you about the contents of that phone call, with the exception of their mention of Griner being exchanged for a Russian operative, but they did not mention anything about the Russian operative that is being exchanged on this article. These articles are disturbingly misleading, as if the phone call was only about Griner and food sanctions, and instead they leave out all the parts where Lavrov talked about the Nazi Azov forces. Now, people, ladies and gentlemen, this is not conspiracy. Google it for yourself. I mean, if I could do it for you, but just Google it for yourself at AZOV Nazis, and you will see everything that I'm talking about. And this is a fact. The militia in Ukraine, which we would call in Afghanistan and Iraq, we would call them insurgents, but in Ukraine, because they're working in our best interests, we call them militia. Compare and contrast how the East are advocating for diplomacy and transparency, while the West are manipulative and deceitful. And for me, it's the media silence that confirms their complicity and that the Russian allegations are legitimate. Big shout out to Clandestine on Twitter for this exceptional analysis as well. She says, in layman's terms, Russia just directly told the U.S. that they know about all their illegal shenanigans in Ukraine. They will complete their mission. All of it will be exposed, and there's nothing Biden or anyone can do to stop it. Russia pleaded with the U.S. to stop supplying Ukraine and stand down because the Ukrainian defeat is inevitable. And there is no point in further wasted life. Their posturing would insinuate that they believe they have complete control, and they're not in the slightest bit worried about the United States military intervention. Basically, the Biden administration and the media are quietly, the Biden admin directly are quietly trying to defuse the Ukraine situation, hoping that no one hears what Russia has to say. And Russia's absolutely not having it. In addition, what else happened today? Well, as a byproduct of what we just got to discussing, that no matter what the United States media and Twitter is telling you, Ukraine is not faring well at all. In reality, Ukraine has been downgraded yet again today by S&P Global, the ratings agency, as default becomes a virtual certainty. The nation was cut to CC from CCC Plus on Friday by S&P on debit plans, and that is a downgrade of two on the actual ratings here. Ukraine asked its foreign creditors to defer payments on debt because they cannot pay their bills. They are, at this point, a 90% probability of defaulting. These are credit default swaps. These credit default swaps are against Ukraine. The cost of insuring these credit default swaps has skyrocketed to the point where this is easily reflecting a massive, massive hedge against the entire country of Ukraine, their economy, and their even their assets and their real estate. You're going to see these continue to climb, and as the war in Russia yields more negative results for Ukraine, you're going to see this increase, I think, exponentially. These credit default swaps are the same things that are used to hedge against, for example, mortgage-backed securities in 2008. So there's a lot of value to knowing that investors are putting their money in the fact that they're hedging against their bets in Ukraine by betting that Ukraine is going to default. Quite simply. In addition, you have Chinese state media suggesting that shooting down Pelosi's plane in Taiwan would be a good idea. The former chief editor of the Chinese Communist Party's state-backed tabloid, the Global Times, suggested the country shoot down United States Speaker of the House Nancy Pelosi's airplane for visiting Taiwan if her plane refuses to divert course. China's government has warned it will take forceful measures if Pelosi visits Taiwan after the Financial Times reported she would travel to the Chinese claimed island invasion. Now, he suggested shooting down the speaker's plane if U.S. fighter jets escort Taiwan. If U.S. fighter jets escort Pelosi's plane out of Taiwan, it is invasion, he wrote. Here's the tweet from the China state-affiliated media. As you can see, it is clearly labeled by even Twitter themselves. They say the PLA has the right to forcibly dispel Pelosi's plane and the United States fighter jets, including firing warning shots and making tactical movement of obstruction. If ineffective, then shoot them down. That's not all, though. They proceeded to say on their Weibo, the official Weibo account of the 80th Army Group of the Chinese Communist Party, People's Liberation Army, PLA, posted this two Chinese word post about 15 hours ago and has gained 650,000 likes, 32,000 comments, and 28,000 shares in China. This was, at this point, now about 24 hours ago, so it's likely got, over 1 million likes at this point. And you can see here clearly that the PLA is getting a lot of support in preparing for war, quite simply. The United States said, quote, "This is unnecessary rhetoric, and the United States policy toward Taiwan remains unchanged." Lieutenant Colonel Martin Myers from the Pentagon said it wouldn't be appropriate to comment on any congressional travel responsibilities, because he's got absolutely nothing to say. And for those of you that are unaware, the People's Republic of China has long claimed sovereignty over Taiwan, and the Strait. They frequently send planes in the area at this point to test their defense zones. They are going to take Taiwan at one point or another here. And whether it's at the cost of Pelosi, no, that remains to be seen. I doubt that the United States is stupid enough to send her in there, but I wouldn't be surprised to see if she was escorted by Chinese fighters, and if there was some sort of conflict in the air. Well, I wouldn't be surprised at all, no matter what people like to believe. So as you can see, here's another article on the same post that says "Get ready for war" from the PLA, and it is getting a lot of support. They commented, the 80th Group Army commented, "We must bear in mind the fundamental responsibility of preparing for war and to charge on the journey of a strong army." The comments received 8,000 thumbs up as of the writing of this article. In addition, the Kremlin, of course, is in solidarity with China. They're calling Pelosi's Taiwan visit a serious provocation. Essentially, China are pissed off and don't want Pelosi going to Taiwan and are willing to risk war with the United States over it. Pelosi's not
Nice.
Pelosi's not a foreign diplomat. She has no reason to be going to Taiwan. So what exactly is Nancy Pelosi going to be doing in Taiwan other than possibly getting more insider trade advice? She's a lawmaker, and she has no reason to be in Taiwan. This has clearly sparked significant interest from China. And China is a country that had zero issues with Trump diplomats or related persons going to Taiwan in the past. But as soon as the Democratic National Party and liberal globalist, if you will, Nancy Pelosi, decide they want to go there, China are prepared for World War III. Does anyone else find that odd? In addition, a few days ago, there was a very weird tweet from Mike Pompeo. And there's certainly something a little deeper here, but Pompeo, being a former Trumpster, is definitely somebody who's said a lot of negative things about the deep state. And the Democratic Party would likely not see that as a good thing. He said, "Nancy, I'll go with you. I'm banned in China, but not freedom-loving Taiwan. See you there." So, why is China so hostile towards Nancy Pelosi? And it's kind of a big deal that the East views Trump and the Republicans in a different way that they view the DNC. I believe that, as we know, there's multiple factions within the United States government working against each other and against us as the people in their own best interests, meaning that the WEF, the World Economic Forum, and the deep state are real and working together in excellent fashion. Both President Xi and Putin recognize the distinction between the DNC and the deep state versus, for example, Trump, who was an outsider. Now, I'm not a Republican, I'm not a Democrat. I did not vote for Trump, and I did not vote for Biden. But I will say that I will, if it smells like shit and it looks like shit, it's probably shit. That being said, I don't care if you're left, right. At this point, we're here coming from the bottom, looking to get those that are on the top. Because I think Americans have had enough of our money being sent to Ukraine, being sent to other countries and central banks at the expense of the hyperinflation that we're currently seeing every single day of our lives. The bank bailouts need to stop. The money laundering needs to stop. The deep state is out of control, and the World Economic Forum is quickly and easily taking away our farmland, our jobs, our ability to own assault rifles, even. As for those of you that are unaware, there was assault weapon ban passed the House today, which in reality was probably got a 95% chance of getting struck down in the Senate here shortly. So it's all for show, but in reality, how many of these Americans do you think are going to continue to vote for President Biden after this? Well, I've got something to show you here, as a matter of fact. This is my weapon of choice. It is a 9mm. This 10-round clip would make this gun legal. But under the new ban, the assault weapon ban, that is supposed to ban assault rifles. Where are my other clips? I've got a few different ones here. They would make my larger clips illegal. This one here, more bullets, illegal. Same gun, It's not going to kill anybody. It's not going to hurt anybody. It's not loaded. And if it was, who gives a shit? But in reality, now it is a legal gun. But if this passes, when I put this clip in it, because it holds a few more bullets, this gun will be illegal. That is not what I had in mind when I thought that the United States was going to protect my rights. That being said, we have the right to bear arms, but as you saw, that 9mm pistol is not an assault rifle. As a matter of fact, most rifles and automatic and semi-automatic weapons are not assault rifles either, unless they were made in Assault France. But I digress. Russia is backing China. China is backing Russia. BRICS is in full swing. Now you've got Venezuela. I'm sorry, not Venezuela. Now you've got Argentina and Saudi Arabia, I believe it is, trying to join BRICS. Brazil, Russia, India, China, Argentina, Saudi Arabia, and soon even more are going to join the fray, leaving the United States as a third world country. More and more countries will join BRICS, mark my words. Not if, but when. And that will further help take trade out of the US dollar. Now we're discussing China and Russia, and this is important because, as you can see, we've got Evergrande putting up their Hong Kong headquarters on the market as they scramble to pay their debts. Creditors are demanding information from Evergrande on their supposed what's the word I'm looking for? Debt restructuring program that they were supposed to release here in July. Now, July has arrived. The end of the month is here. And Evergrande says, we don't have it. We don't have our debt restructuring program, and we won't have it till the end of the year. This is funny because they had $2 billion worth of assets seized. And the Chinese Communist Party is taking it. Check this out. These are unfinished projects, property projects in different parts of China. And you see Beijing, Henan, Yunnan, Hubei, Jiangxi, Hebei. There are dozens and dozens of unfinished property projects. You see the blue mark is over 40 for every large circle, over 10 for every medium, 5 and 1 for the smallest. So there are properties all over the country that are unfinished. Chinese people are refusing to pay, and China's markets have been disappointed by a lack of stimulus announcement during yesterday's meeting in China. And that sparked a broad sell-off in the tech sector and property sector in the Hang Seng in China. Index, I believe, was down almost 3%, taking its July losses to over 10%. Yeah, here it is. Go to it. There we go. Worst in a year, a gauge of Hong Kong listed stocks is down 10% in July. What's going to happen to this stuff? Well, the Chinese Communist Party is going to take it. All of these projects here that are owned by Evergrande and all these companies like Evergrande and China, Country Garden and so on, Shimao Holdings, they're all going to get tons and tons of their projects taken away from them by the Chinese Communist Party. And all of these people that have been paying on them and that refuse to pay, now at this point refuse to pay because they know they're never going to see their fucking apartments, are going to be left holding a bag of nothing, an empty fucking bag. That's why they're called bag holders. China's considering a plan to seize the undeveloped land from these distressed real estate companies to help finance the completion of stalled housing projects that have sparked these mortgage boycotts across of China. The proposal will take advantage of their laws allowing local governments to take back control of the land sold to these real estate brokers and companies, developers, if it remains undeveloped after 2 years without compensation. This gives the authorities in China the legal ability to direct funds to uncompleted homes, and then they can sell them off as their own assets, potentially to the detriment of the creditors who would lose claims on some of the developers' most valuable assets. In a typical scenario, the government would seize land from a distressed developer and give it to a healthier rival. But in this actual case, the government could also rezone the seized land to increase its value and keep it for themselves. Same thing the World Economic Forum is trying to do in the United States by pricing people out of homes and farms, and same thing in Holland and Canada by forcing people to reduce nitrogen by 30%, thus closing hundreds, if not thousands, of farms and ranches around Holland, Canada, and the world. Soon, in the name of climate change, you're going to see President Biden do this exact same thing in the United States. And all of these farmers and ranchers are going to have to find a way to pay for their land. And when they can't, they're going to sell it. They're going to sell it to people like Bill Gates, who is now the largest landowner in the United States of America. They're going to sell it to companies like Blackstone, who is going to be one of the biggest landlords in the United States and in the world soon. And they're going to sell it to companies like Halliburton, who want to use it for further destruction of our planet and mining, fracking and mining and all sorts of other things, which will eventually come back around as the oil crisis gets worse after climate change. In a few years here, after climate change is deemed to be the next bunch of bullshit. Now, just bear with me. You don't have to believe me if you don't want to. Give it time. Just like COVID and the vaccines, I think a lot of people will realize that climate change is not real, as we've been told directly by the PhD doctor, former creator of the Weather Channel, and many, many other scientists. The fact remains that I will say before moving on to this, that the reason that most scientists come out with climate change is real studies is because 97% of climate change studies state that they're real. The other 3% state that climate change is not real. The reason this is because only the scientific communities and the only scientific scientists that will receive subsidies from the government, which means cash, are those that print and produce studies that claim that climate change is real. If there are studies that claim that climate change are not real, they do not get paid. That's why only 3% of them have come out saying this. Because in order to come up with these studies, it costs money. And oftentimes it's a for-profit situation in which they make a lot more money off of these government grants and subsidies than they ever spend on the actual studies themselves. That being said, China now claims they have the first offshore shale and oil and gas discovery. This is going to be a further disconnect between the West and Russia and China, as Russia, China, and the Middle East hold much more oil than the United States, and combined they've got much greater refining capacity as well. The United States refining capacity is completely maxed out, and as we have closed pipelines and refineries over the last several years, that as we move towards clean energy, which is in reality just electricity derived from coal and nuclear power, the level of the actual gall that these people have is beyond, is quite disgusting. China's thought to have more than 30 trillion cubic meters of recoverable shale gas now. It has struggled with development, all of which has been onshore. But unconventional oil production accounts for less than 1% of China's total crude oil output due to high break-evens and non-commercial economics. So that being said, look at China here in the near future as a big player in the oil markets, as they now seem to have claim to a large amount of shale and oil and natural gas, further reducing their need for the United States dollar and their need to trade in it. Here's it. This came out from Bloomberg today. Bloomberg stated today, global central banks made one of their biggest forecasting failures on record when they woefully underestimated the magnitude and duration of the worst inflation surge in decades. As the following series of charts, okay, well, they have this group of charts here, but I'm not going to pull those up. They say that the Federal Reserve and most counterparts are now racing to make up for lost time by raising interest rate the most in decades. This means borrowing costs may end up higher than if the hiking started sooner, and the record of failure on forecasting could undermine confidence in the current assurances that a soft landing is still possible. If you're unaware, the New York Fed, the same New York Fed that manages the plunge protection team's ESF money when they need to bail out the VIX and the SPY, for example, when they need to suppress the VIX and bail out the SPY, or, for example, cause currency swaps to devalue the VIX and oil in order to inflate the value of the DXY. The New York Fed states that there is only a 10% chance of a soft landing. There is a 90% chance, according to their models and calculations and statistics, there's a 90% chance that a soft landing is impossible. Meanwhile, today, NASDAQ China Index dropped 3%, bucking U.S. tech performance as sentiment is starting to sour again given ongoing COVID limitations. Muted stimulus actions and ongoing accounting standoff between Beijing and Washington. Alibaba added to the SEC list of 200 Chinese companies facing delisting. Ladies and gentlemen, this is what I was talking about when I mentioned the executive order. The executive orders are still working like a charm. A lot of people think that because we said that June 3rd was Judgment Day, which I truly believe it is and was, that mother of all short squeezes, for example, on silver and gold and meme stocks was going to happen on that date, which is an absolute farce. It's a fallacy. I never have said that in the past. But we did see on that date that the cost to borrow of meme stocks increased greatly, that margin issues have also increased, and since that date, the SEC, the Washington, and China have frantically been working together to prevent over 200 Chinese stocks from being delisted. These 200 Chinese stocks are in addition to the fact that this collateral already cannot be traded here in the United States. Executive Order 13959 as amended and 14032 were to counter the People's Republic, companies that finance the People's Republic of China, and military companies in China as well. So anything that's associated with the Chinese tech sector or military sector in any way, even including even healthcare and a lot of their aeronautics, aerospace sectors are completely untradable in many aspects between United States companies. And a lot of these guys like BlackRock and Vanguard have funds that have hundreds of millions and billions of dollars of emerging markets funds within them. A lot of this is these same unvetted mutual funds that hold these 200 Chinese stocks and these other nearly 100 stocks that are listed on the executive orders we just mentioned. Because of these facts and many more, which I'm about to explain to you, many meme stockholders are probably going to be filthy fucking rich by executive order of the President of the United States, the President of China, and the President of Russia. Let's get back into it. I've got a little bit more here and I'll explain. So Alibaba has now been added to that SEC list of 200 Chinese companies facing delisting. This is going to potentially lead to margin call situations all across the industry, as we've seen happen many, many times. I showed you previously Executive Order 13959 that was extended multiple times and finally came into effect on June 3rd, 2022. We've showed you Executive Order 14032. We've showed you the annex list of companies. This is incomplete because it doesn't all fit on one page. This is just A through C that have been sanctioned. And then we've showed you the fact that BlackRock and Vanguard have massive exposure to these. 43% exposure to the Chinese market in this $72 billion fund, for example. 36% exposure in this $70 billion fund as well. And they have stated that the military's thrift savings plans may be invested in unvetted mutual funds holding these unvetted stocks, and more so that were even added in February by the United States Treasury Office of Foreign Assets Control. And it is up to the investor, such as you or I, or any military and federal employee, such as United States Postal Service workers, etc., to go into these mutual funds, which hold hundreds of stocks each, to see if they hold any of these and many more that are not listed below within their actual stocks. So basically, they're telling you, we're not going to take the time to do this because we know that this is garbage collateral, and we're going to leave you as pensioners, 401ks, thrift savings plan holders, and IRA holders, we're going to leave you holding the bag. And that's why BlackRock has lost $1.7 trillion this year. BlackRock has lost $1.7 trillion so far this year, and Credit Suisse has just posted the third quarter in a row of losses. This quarter equaling over $1.6 billion in losses. This is the most losses for Credit Suisse in 100 years. Check this out. My man Mac D says, recession at the zero bound for the middle class, the bull market for the casino class. Anyone who believes the fairy tale of a bull market here deserves their fate. An easy to spot downward trend. Technical analysis is very easy to spot, especially when it's doing the exact same thing it did in 2007 and 2008. The S&P oscillator shows when it's overbought and oversold, and it is extremely fucking overbought. With 3 rate hikes, confirmed recession at this point, we're looking at a lot more rate hikes, bond yields to skyrocket, and the economy, and in turn, business and jobs to plummet, as well as Chinese real estate, American real estate, and that around the world as well. What do you guys think? All right, maybe they'll chime in a few. Many people are unaware that the 2008 global financial collapse is not just due to subprime loans. The vast majority of it were people that could afford it as well, but were in balloon mortgages. These balloon mortgages, in which the beginning of the loan is a low interest rate, and then later balloons into a higher interest rate, anywhere between 2 to 10 years in, usually around 5-year mark. These are called ARM loans, adjustable rate mortgages. Now, as a former real estate broker, I can tell you that I've seen some people do well and a lot of people completely fail with adjustable rate mortgages because when interest rates go up, and if you don't have enough income to qualify for a fixed rate mortgage refinance, you will not be able to do so, even if it would make your mortgage cheaper than it is currently, thus making you more likely to be able to afford it. That's how a lot of people got trapped. And Canada, for example, who has a lot of home buyers, is 53% of all Canadian homeowners have adjustable rate mortgages, these balloon loans. And as the Central Bank of Canada and the United States and around the world, European Central Bank, etc., raise rates, well, so will their interest rate that they're paying, and their balloon note will continue to go up higher and higher. This is what leads us into a thinking about China. Then you got to think about the Chinese real estate developers that I showed you just moments ago have tons and tons of commercially mortgage-backed securities and apartments that are going to fail. And these commercial mortgage-backed securities are linked to mortgage-backed securities in Canada and the United States, Ukraine, and everywhere else in the world. The rehypothecations and bilateral netting and net settlement that occurs between banks allows them to trade swaps and contracts all around the world. So a company in the United States will be a bank, for example, will be greatly affected if it is the player, for example, in trading in the toxic derivatives market by Chinese commercial mortgage-backed securities, which will in turn affect Canadian residential mortgage-backed securities, American residential mortgage-backed securities, and then you throw in the Ukrainian mortgage-backed securities, which are also going to crash, as we can see by the credit default swaps in Ukraine being at a 95% pricing in of a collapse due to the S&P Global downgrade, showing that to CC, showing that Ukraine only has a 90% chance of defaulting on their loans. Vajos, thanks very much for your support, brother. The Think Tank and I greatly appreciate you. Let's move on. This is the 2-year over the 10-year yield curve. The higher this number is, the higher the 2-year yield is over the 10-year yield. These are bonds we're talking about, ladies and gentlemen. And when you're talking about bonds, the reality of the matter is that when you see something as ugly as this, you may not understand it, but let me tell you that every time this goes up, the market crashes because these signal recessions. Every god fucking time. Every single time. There's nothing that the Biden administration can say to prove otherwise. Nothing. This is an excellent point by Occupy the Feds on Twitter, and I want to show this to you. The markets have dialed back expectations and are extremely bullish over 400 on the SPY right now because the Fed has no credibility, absolute zero. The inflation king Powell waffled spinelessly on forward guidance, and he's absolutely right. The Federal Reserve continues to buy more United States Treasuries and mortgage-backed securities. Instead of their estimates of $82.7 billion worth of purchases, they had to buy $90 billion worth of purchases. Where is the quantitative tightening? Here's the SOMA operations right here, as you can see. Perfectly proving the point. $3 trillion. 3.296 trillion. It looks like it's in billions because it doesn't say that it's in thousands or in hundreds above. In reality, if you wonder why the market is green after a hike like this, is because the United States Fed, sorry, I shouldn't say that. The Fed is not an arm of the government. The Federal Reserve is a fucking Ponzi scheme. And this Ponzi scheme, with their lunacy, as stated here, they are the balance sheet. The inflation is the balance sheet. They absolutely are going to continue these reinvestments for as long as possible. And they're trying to claim that a runoff, letting the mortgage-backed securities mature, is going to be sufficient for them to reduce their balance sheet. But in actuality, that would take 9.5 years if they stopped buying altogether. Why else Would we be green? Well, bigger wage gains, but that's not a good thing because bigger wage gains are necessary, and that's going to cause further and further prices to go up for corporations. As well, there's more personal spending. People have to spend more to survive. This is due to PCI and hotter inflation as the PCE increases yields higher bond yields. Higher bond yields are bad. They signal a recession every single time. And Peter Schiff says it's likely that the United States economy will never be in a recession again. If we no longer have an objective standard to define one, the government will always be able to find some excuse to claim there isn't one. Ironically, we're not in a recession now. We're in a depression, says Peter Schiff. And as a matter of fact, I've been saying this for several months now. And last July 2021, when we started this channel, the main purpose was to warn people of the coming hyperinflation and depression that is inevitable due to the ridiculous printing of money that's occurred. As a byproduct, it continues to happen every single day. Look at this. We've had another new all-time high reverse repurchase program operation today. Again. Most parties ever, and the most amount of money ever, and the highest award rate ever, and the highest amount of money awarded ever. I'm fucking disgusted to be an American at this point, and that's probably why I'm making these videos. You know, I'm blessed. I love my country, but I hate what the Fed and big banks and the government have done to this fucking country. I fucking hate it. They're taxing me at 48 to 52%. My fucking corporation gets taxed. Then I get taxed on top of that when I get paid when I pay myself a salary. That's double taxation. And then I get triple taxed when I pay my property taxes. Then I get quadruple taxed when I buy something like a car or I go to the grocery stores. Then I get taxed again when I have to pay half of all of my employees' taxes. Then I get taxed again, and I'll just keep going on. But that's not what this... I'm not here to bitch about my fucking expenses. I'm here to explain to people how we're being quadruple and quintuple taxed on the same fucking money over and over again, and the hyperinflation is being purposely caused by the Federal Reserve in order to make it easier for them to pay off their United States fucking debt at your expense. There has been 111 participants as banks desperately cook the books on the last day of the month. Today is the last trading day of the month, and you will, as long as we're crashing until we fucking completely collapsed, which is inevitable again, you're going to see the United States reverse repo treasury here operations get higher and higher. There's 111 participating counterparties, $2,300,200 million. And yesterday, it was $2,239,883 million, and so on, and so on, and so on. Every single day, we're giving away more and more money, your money, my money, that we have to pay for, our children, our grandchildren have to pay for, as wage slaves, as taxed wage slaves. And I'm fucking tired of it. I'm absolutely fucking tired of it. And this leads me into how I'm hedging. Well, we'll get in there. As of right now, we are 12% off the low, according to the Kobesai letter. The S&P 500 is in its third relief rally of 10% or more. But put this in perspective, ladies and gentlemen. Market crashes don't happen overnight. In 2008, we had 5 fucking rallies averaging 14%. And in 2001, we had 6 rallies averaging 17%. And now we've already got 3, and they can only average 10. It shows you the lack of liquidity, even though there's ridiculous amounts of money continuously being pushed into the system by commercial banknotes, which is the way that banks artificially print money. They don't even need to get it from the central bank. Then you've got the Federal Reserve buying United States treasuries, buying mortgage-backed securities, and further using the New York Fed as their scapegoat, or so as I say, as their patsy to use plunge protection team taxpayer dollars. That's Janet Yellen and Gary Gensler, for those of you that are unaware, to prop up the stock, equities, bond, real estate markets. So this is going to take some time. We'll probably see a little bit of a continued relief rally before we see an actual further decline in the stock market. And as you've seen in the past, lower lows, lower highs. Same thing here. We've got quite a bit of ways to go before capitulation leads to sub '08 levels. These bailouts are absolutely fucking inevitable. The 2 quarters of sequential negative GDP is already worse than the year 2000 recession. See this red line? That was Y2K. See this right now? That's where we're at right now. You see this shit way the fuck down here? That, my friends, was 08 and 09. So when people say, oh, I don't think the market's going to crash, or it's going to be a soft landing, or we're just going to have a meltdown until we reach the bottom and then we're going to go back up, I call bullshit. I'll fucking bet anything on it. And as a matter of fact, I've bet almost everything on it at this point. And I will continue to do so because I know where my conviction lies. My conviction lies in that the government always lies. It's transitory. There is no recession. I'll go on, but there's no point at this point. There's no point now. And we've heard from Janet Yellen tell us on several occasions that stablecoins and over-leveraged hedge funds are the #1 risks to financial stability. She told us this in the September 28th, 2021 CARES Act Congress testimony under oath. You've seen companies like Susquehanna and Citadel, Bank of America and JP Morgan, and all of the other major players that delve in the markets and toxic derivatives markets short a ridiculous amount of meme stocks and precious metals to the point where the COMEX is a complete farce. London Metals Exchange doesn't even have, has the lowest inventory that they have had in 10 fucking years. Bank of America continues to lease silver from JP Morgan just to further short the price of silver and gold on the precious metals market. This being said, is extremely bullish news for companies like Hycroft Mining, HYMC, and AMC Entertainment, who own a literal fucking gold and silver mine. And you've seen these players in the abusive swaps market and toxic derivatives market get absolutely crushed. And they're paying peanuts in settlements for trading ahead of OTC customer orders and for taking the other side of the trade. We've seen them pay slightly more peanuts. For example, $22 million for misleading clients about pricing trades. That their business unit handling retail customer orders from other brokerage firms made misleading statements to them about the way it prices trades. The SEC finds that Citadel suggested to its broker-dealer clients that upon receiving retail orders they forwarded from their own customers, it either took the other side of the trade and provided the best price that is observed on various market data feeds, or sought to obtain that price in the marketplace. The process of taking the other side of the trade orders is known as internalization. Internalization can be done where investors place your orders. The broker-dealer, such as Robinhood and Webull, sends it to an internalizer, such as Citadel Connect, and then Citadel Connect decides to whether take the other side of the trade and price it or route it to the marketplace. Well, as we've seen from AMC and all the other stocks data like BBIG trading in the 77% dark pools, AMC trading in 70% dark pool ranges consistently. Same with GameStop. They're sending it from Citadel Connect, their internalizer, over to Citadel Securities, the market maker, in order to take the other side of the trade and price it. Then their hedge fund trades against you. Citadel Securities, as they have the ability to see all your trades in real time from their sister companies. This, ladies and gentlemen, is why broker-dealers that route directly to lit markets, such as Lit Xchange, coming soon. Lit Xchange LLC is in the process of getting registered as a broker-dealer with FINRA, and we will be coming to take all of Robinhood and Weeble's customers very, very soon. I'm looking forward to that date. Here you have Susquehanna Securities broker check report. They have a 110-page long report stating their information and the issues and legal and illegal acts that they've committed, such as taking the other side of the trade. On 6 occasions they exceeded the applicable limit position by 23,000 contracts, etc., over and over and over again, in order to make as much money as possible, because they're paying $6,000 in fines and $3,125 in fines. And guess who gets paid these fines? SIBO, the Chicago Board of Options Exchange. They censure in a fine of $25,000, which goes to the United States Treasury, and an additional $3,125 payable to the Chicago Board of Options Exchange. They have no incentive to stop committing these crimes. They have every incentive to continue to do so, as this is an easy way for them to push money back and forth and make money on top of it. Without admitting or denying the findings, the firm consented to the sanctions and to the entry of findings that the firm failed to comply with an exemption to established options position limits. These are known as delta-based equity hedge exemption. So they're exceeding their delta-based equity hedges by position limits of 250,000 options contracts. So for example, when they're over leveraged and have large amounts of shorts, say on GameStop or AMC, they're not delta hedging by buying shares of the stock. They're delta hedging by marrying calls and puts. And when they can't do that, they just take out 250,000 options contracts more than the allowable limit. And this was done in 4 listed options on 6 occasions on the relevant options exchanges, just on this one finding. This is how they're able to prevent the stock price from going up in many ways. The position limits of each listed options traded in order to identify any position that would potentially exceed the applicable limits. However, the firms did not indicate how the daily review would be documented. In addition, they did not address the need to monitor the firm's intraday positions on a delta-adjusted basis to ensure compliance with the delta hedge exemption. So they don't even need to address their intraday positions on a delta-adjusted basis. This is the level of criminality that is occurring every single day. And Susquehanna, the reason I bring them up is because they are the #1 shorter. They hold the most short positions on AMC, if my understanding is correct. Now, ladies and gentlemen, we are at 972 viewers. Let's try to break that 1,000 viewer support level. 1,000 viewer resistance level. Drop a like. Feel free to share this on social media if you can. That would be great, really helpful to the channel and to get this information out to other investors. Here is Citadel Securities. Theirs is 224 pages. 224 pages from BrokerCheck. Absolute lunacy, the amount of fines that are being received here. And we're just going to scroll on down and we'll see what we find. We're not even going to target anything specifically. Let's just get down to where they have a fine and we'll see what, well, that's pretty long. Okay. Well, let's just put it this way. The findings were that Citadel failed to establish and maintain reasonable risk management controls by rejecting designed to prevent the entry of erroneous orders by rejecting orders that exceed the appropriate price size and parameters. The firm did not apply certain pre-trade erroneous order controls to certain options limit orders, and so on and so on. I don't want to bore you to death. These delays in processing market data updates reduced the effectiveness of the firm's controls in times of volatility. They received a $15,000 fine, a slap on the wrist. What an absolute fucking joke. Let's see, the allegations here are without admitting or denying the firm consented to the sanctions, that it failed to establish and maintain reasonable risk management controls and supervisory procedures, etc., etc. So as you can see, they've got a big risk management problem at Citadel Securities. And that's why they've got $65 billion worth of securities sold, not yet purchased. Now, these securities sold at $65 billion are calculated using fair value accounting standards. Using fair value accounting does not equate for the prices of a share price, the stock price going up during market volatility situations, say a stock market equities crash, for example, or a short squeeze that occurred, much like that of January 28th, 2021 and June 2nd, 2021, which we are inevitably going to see again, because we can see that by these hundreds of thousands of dollars and millions of dollars in fines, Citadel has not stopped their risky business. For example, here you can see their allegations that Citadel Securities stipulated that on at least 41 instances it routed agency orders to BZX and executed those orders as principal without first exposing them on BZX for at least 1 second. So they didn't even put them on there for a fucking second. According to the letter of consent on June 26, 2019, each referenced instance constituted a violation of BZX rules. The firm violated these rules because it failed to establish, maintain, and enforce written supervisory procedures. The same things that continue to get. There's a $70,000 fine that goes to the United States Treasury. Well, let's put it this way. I don't want to dwell on this too much, so I'll just tell you that this is a 224-page document of crime. And there are millions and millions of dollars worth of fines here. These are just the absolute cost of doing business for Citadel. The firm violated... Hold on one second. Let me read this one. The firm violated NYSE ARCA equities rules by failing to enter and maintain continuous two-sided trading interest within the designated percentage above and below the NBBO, as required. During part of the review, market maker quoting surveillances only ran 4 times a day, failing to identify numerous potential violations. Given the speed of the market, reports that only run 4 times a day by their very nature are unable to alert the firm about outages quickly enough for them to be corrected in a timely manner. The reports failed to flag issues if they were resolved before the reports ran, allowing these issues to recur without the firm detecting patterns of repeating problems. They violated various equities rules, blah, 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 because it did not have a system in place to ensure compliance, etc. Go ahead, brother.
Talking about the ability to find these companies but have them not admit wrongdoing. People hear that all the time, and they ask the question, how is that possible? How is it possible that they can continuously get fined less money than they actually ended up stealing from people, more or less, and have to pay the fine but not admit wrongdoing? And I just want to point out, the SEC chair before Gary Gensler was Mary Jo White. Talked about this last night. Mary Jo White was a lawyer who was defending CEOs of big corporations and on Wall Street. When she became the SEC chair in 2013, her number one first mandate was that she would start demanding more admissions of misconduct as part of enforcement settlements, where you had to take an admission of guilt while paying the fine, or risk going to court with us. Yet when she ended up her term 4 years into a 5-year term and resigned, she did none of that, and in fact went right back to the same law firm afterwards, representing CEOs on Wall Street and helping them to make sure that they didn't have any issues. Right? People like any of the big CEOs you can think of, basically, who've gone through any issues. Right? And what's interesting about that, like John Mack from Morgan Stanley, for example, she stopped, in fact, got somebody fired, allegedly, who was doing investigations into Morgan Stanley. And the guy who was doing the investigations, she ended up using influence, allegedly, to get them fired. And Rolling Stone magazine did a whole article on that. And that just ties into what you're showing here, 267 or 224 pages of fines. And yet they don't have to admit guilt, and yet they also get to write those fines off on their taxes the next year.
It's tax deductible. It's a cost
Yes,
of doing
sir.
business. It's fucking tax deduction, guys. Holy
So
fuck.
it doesn't matter if you've got, this is not blue or red, guys. It doesn't matter if you've got a Barack Obama appointed Mary Jo White or a Donald Trump appointed Gary Gensler. It's the same thing.
That's right. It doesn't matter if you're left or right. We're from the bottom, and we're coming for those on the top. Citadel on numerous occasions failed to grant priority to the highest bid and or lowest offer, the NBBO, when such bid or offer was available. Best price execution. You failed to get best price execution. And on numerous occasions traded through the national best bidder offer. Straight up violation of the rules, throwing the NBBO to the side, saying, we don't give a shit what it is, we're going to pay you what we want. And they received a whopping $7,500 fine. They probably made hundreds of thousands of dollars off that, if not more. But anyway, I'm not going to dwell on that because we already know. We've done on this channel and on many others and Reddit and all sorts of places, LinkedIn, etc. We've done thousands, if not hundreds of thousands of hours of due diligence now, looking up short positions, married puts, divorce puts, rehypothecations, naked shorts, synthetic shorts, all sorts of things, failures to deliver, and so on. And I'll touch on those in a minute. But we already know that AMC and GameStop are majority owned by retail investors, and that's what scares the ever-loving piss out of these fucking hedge funds that are short AMC and GameStop. For example, Melvin Capital supposedly closed their short positions, but guess what, guys? I haven't seen any price action reflective of Melvin Capital closing their short positions on AMC and GameStop. So that leads me to believe that those shorts have not been closed. They have just been assumed by other parties. The biggest short squeeze so far, for those of you that are unaware, accounting for inflation, reached around $33,000 a share. $33,000 a share in today's dollars. Thanks for Wolfie for bringing this up here from the think tank. But more shares were sold short than could be bought back on the market. So Northern Pacific shares rose quickly as short sellers rushed frantically to cover their positions. Except no shares were available because the owners, Harriman and Hill, had cornered the market and the stock price was bid up. $300, then $500, $800, and finally $1,000 a share. Guys, this was almost 100 fucking years ago. That $1,000 a share is worth $33,000 a share today. The deadline to deliver shorted shares was on 2:15 p.m. on a Thursday, and short sellers dumped everything as their Pacific Northern losses grew. It set off market-wide panic. Margin loan rates spiked and compounded the selling. The value of $1,000. This was in 1901. It's 2022. That's an average of $33,824 today. That's a 3,282% increase in the share price of what it was at that time. JP Morgan realized that the worst was still to come. And so he called a truce with Harriman, and they devised a plan. J.P. Morgan, Kuhn, Loeb and Company, and all the others announced they would not force delivery at the deadline, and Northern Pacific sold off. The short sellers in Northern Pacific caught a lucky break. They were allowed to close their short positions at $160 a share. Granted, this was 1901. So think about how much $160 a share is in 1901 to today, because their highest level of covering happened at $1,000 a share, which is the equivalent of $33,824 per share. They only suffered a devastating loss at that time instead of complete and utter annihilation. And that's exactly what's going to happen to many short sellers this time around. As we can see from this GameStop shareholder on January 28th at 9:34 a.m., about 1 minute before the market was halted due to the vast increases in price, he was selling fractional shares at market order prices, as a market order. And his market order filled his 0.54, just over half a share of GameStop, at an average price of $5,124.50 a share. Ladies and gentlemen, we're going to be so fucking rich. You're not going to know what the fuck to do with yourself. At least that's what I truly believe, and I'm not a financial advisor, and this is not financial advice of any kind. Hang on, mouse is stuck on something. Or the whole computer's stuck, I'm not sure. Give me one. That's not great. Streamlabs is not cooperating at all.
While Boss is frozen, we will keep this going until he gets back to us, if you guys can still hear me. So let me know if you guys can hear me. When Boss gets back on, he can roll right back into it. Somebody give me a thumbs up in the chat if you can still hear us.
Well, I can hear you, just not sure if they can hear you in the chat.
Bit of a delay. All right, thanks. So we'll keep this rolling until Boss gets rolled back in. Folks, we've got the IEX decision that came down, which was really good news. So that's where they were trying to challenge the ability for the IEX to take on orders. And guys, if you don't know about the IEX, we'll just handle that real quick here while Boss is getting rebooted. The IEX uses what's called a speed bump. It's an exchange that everybody knows about. And when you hear people say, if you're going to buy and you want your order to count as far as the price, right, for price discovery impact, if you want that to count, buy from a lit exchange like the IEX. And if you do that, understand the IEX utilizes what's called a speed bump. We're talking physical cable. So when you've got two different locations and they're running orders to them, what the normal markets can allow the shorting hedge funds to do is to actually front run the order by using the shorter connection to establish what's happening before the longer connection has the order go through. It's a way to see it happening fractions of a second sooner. And what they actually do is actually coil up miles of fiber optic cable, physical cable, to make sure that the connections from the front of the room to the back of the room or from different locations entirely all end up with the exact same length of physical coiled fiber optic cable. And that ensures that nobody has any faster methods of getting information. Because what they do is they will actually sell or rent, they will actually rent the servers that have the shortest access to the feed than they will from the ones at the back of the room. And what that does is enables them to have that fraction of a second quicker the people who pay for it. The public data feeds come from the servers at the back. The ones at the front are the ones paid for by hedge funds such as Citadel and others. And they've even gone so far as to move their offices to be closer to the exchange to gain another fraction of a second faster so they can front run orders. We're talking fractions of a penny, but this stuff adds up. So they also use a speed bump also through an algorithm. There's a physical portion and there's an algorithm portion, where the IEX argues that by using a speed bump that slows down every order by 350 microseconds, it can reduce the opportunities and level the playing field among investors. That's the, yes, it is. The IEX Tesla, IEX is an exchange. And when you go to put your order in, if you choose to make the stock purchase, we're not telling you to buy or sell. If you choose to do that, and if you want the purchase to count as far as the price discovery, the volume always counts. But if you don't want to go to a dark pool, then what you need to do is you need to select the option, which you can through Active Trader Pro and Fidelity and other means. And that gives you the ability to choose the IEX as an option. And that's how you can make sure that that counts as far as price discovery. Boss, we're just kind of holding the fort here till you're back on. Are you
You can keep
good to
going,
go?
brother. You read my mind. Keep going, dude. IEX is a
I
lit
see you're back
market.
on.
Yeah, IEX
So
is a lit
that's,
market.
folks,
That's the
when
way
we
to go.
talk about the lit exchange, that's what we're talking.
Sorry about that. I didn't mean to cut off Pantheon there. I was just trying to reload my Discord. When we're talking about trading in lit markets and lit exchanges, that would be trading on IEX. Lit Exchange is the name of a broker dealer which we're currently
With
working
World
on.
Directive RBC. There you are, boss.
Keep going.
As he was trading with RBC, he discovered that their trades were being front run by competitors. Just talking about the IEX.
Absolutely. And it's really important to note that it's really good for us in general that this happened, because Citadel was basically trying to state that they could trade in ways that were that didn't have to go through IEX. I think your explanation was perfect. See, I got another article here that can help you explain a little. Can help explain these delimit orders. Okay, and let me read it simply. They're designed to stop high frequency orders, correct? And here you go. The delimit product is designed for certain orders with so-called displayed prices. High frequency traders trade against these orders that are waiting to be filled. At certain times of day, prices can start to move, and because trading systems are so fast, some of these high frequency traders can trade in 1 or 2 milliseconds before the overall market price, known as the NBBO, changes in order to gain an advantage. IEX says that's faster than the blink of an eye. And this is latency arbitrage. Exactly the findings I was just telling you about on Citadel just a few moments ago on the Citadel FINRA broker check. That is exactly what we're talking about. There are fines on top of fines for them doing this. Okay, this is where they trade at fractions of a second before slower executed orders, and IEX is arguing that this incentivizes traders to trade off on public exchanges and through non-displayed orders, meaning in dark pools. In dark pools. This decreases market liquidity and transparency, meaning the stock price isn't fucking real. That's why there's been an all-time high of 9,697,393 failures to deliver on June 28th. That is an absolute massive, massive number. And these failures to deliver do have to be rolled in one way or another, whether it be through contracts or swaps or futures, but they have to be fucking rolled. So this money, all this money that's owed back for all these shares and all these FTDs is rolling around, and it will have to become payable at some point or another. And what happened on June 3rd? The date of the executive order implementation, we saw the average failures to deliver go from 100 grand to a million, straight up to 2.6 million on June 3rd. And then they started to try to wind those down, and we're not able to. They're still rolling millions per day up until the 27th and 28th, when we saw 2.8 million and an all-time high 9.697 million failures to deliver on AMC alone. Ladies and gentlemen, the stock price isn't real. The guys, these assholes like Ken Griffin, are doing everything within their power to prevent the stock price from increasing and getting out of control, because it will be utter destruction for their companies. And on that note, because of all the issues that we're seeing with Chinese media, Taiwan, Russia, Ukraine, all these issues that are happening right now between BRICS and NATO countries, you're going to see more sanctions, more companies taken off the New York Stock Exchange. And those companies that were just sanctioned are going to be via the executive orders 14032 and 13959, in addition to others like Alibaba that was just added to the list today, are going to be removed from the New York Stock Exchange, essentially wiping out hundreds of billions, if not most likely trillions of dollars off of equities markets on the New York Stock Exchange and taking them to China. Ladies and gentlemen, a market crash is absolutely fucking imminent. And when collateral loses value, well, shares get recalled and shorts get liquidated. And short hedge funds get liquidated, causing a chain of events that would at that point be unstoppable and lead into a further drag down of our equities markets. At which point, in order to prevent it from happening further, the liquidations would cause short positions in AMC and GameStop, BBIG, Mullen, MMAT, Sundial, Tilray, you name it, there's 100 fucking meme stocks, to go absolutely through the roof, parabolic, and skyrocket. And then, in my opinion, at some point here, not long after, we're going to see the same thing happen in the precious metals market and other commodities markets. So, ladies and gentlemen, I'd like you to note the last thing I'm going to show you. Some of you have seen this before if you've been on this channel. If you haven't, where the hell have you been? Just a short list of some of the heavily shorted stocks that ran 5,000%, 2,800%, 300%, etc., 70%, 1,000%, etc., 1,400, 1,300, 1,200%, all across the board. CPS, GEVO, OEG, Ocean Power Tech, Clovis, Foresight Autonomous, Senseonics. Huge amounts of shorts and short covering happened after the AMC and GameStop debacle of January 28th, when they were forced to stop trading. And when they resumed trading in the first week of February, hundreds of meme stocks like Sundial and Zyomedica and Fuel Cell and Ideanomics just skyrocketed and went through the fucking roof as shorts were forced to close positions. Ladies and gentlemen, by executive order of the president, we're going to be so goddamn fucking rich. Get the goddamn money printer out, Jerome Powell, because you're going to fucking need it. What do you guys think? And remember, I'm not here to tell anybody what to buy, what to sell. I'm just here to explain what I've learned. Do your own due diligence. Don't take my word for it. Go look it up for yourself. Figure it out for yourself, because I'm not here to give you fucking advice. I'm just here to tell you the things that we've come across that are frightening to the point where if I don't tell anybody, I don't think I could sleep at night. And that's the real fact of why I'm doing these videos. Don't forget, next week, Pantheon and I will be having a discussion and an interview with the one and only CEO of Highcroft Mining Company, AMC partner. And we will be discussing the most important things out there, the everything on your mind. We will talk about it with Highcroft CEO, Dr. Diane Garrett. Dr. Garrett has a PhD and a master's degree and is very well versed in running companies, and recently helped some of her more recent employers increase their market cap thousands of percentage points. On that note, ladies and gentlemen, have a great day. Have a great weekend. I wish you peace and wealth. And I'm not here for millions. I'm here for billions with an S. And I'm going to get rich or die buying. Because I've been rich and I've been poor. And it really fucking sucks being poor. I'll tell you that much. Have a great one, my friends.
Thank you, boss.
Thank you, Pantheon. Thank you, Cash Money. Thank you to everybody in the think tank for being here with us tonight. Thank you for everybody on YouTube and Rumble and Twitter. All you 20,000 beautiful red-pilled individuals for taking the time out of your day to be here with us right now and for subscribing to the channel. And in case I didn't mention this earlier, which I did not, the Swiss Central Bank has reported their largest loss since 1907. That's a loss of $100 billion for the Swiss Central Bank. Holy shit, we're going to be fucking rich as balls. Oh my God. It's going to be nuts.
If you have a milkshake, and I have a milkshake, and I have a straw, there it is. That's a straw.
Ken Griffin, I'm coming for your fucking milkshake.
If you have a milkshake,
I'm going to drink it up.
and I have a milkshake, and I have a straw, there it is. That's a straw. See? You watching? And my straw reaches across the room and starts to drink your milkshake. I drink your milkshake. I drink it up.
Don't bully me, Daniel.
Hedge funds are fucked. Holy shit. These apes are going to have their way with them. Holy shit.
Let's fucking go.
Billions.
It's blah, 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 blah.